do believe that the economy is recovering, and I agree with Richard here in the sense that the data's really gotten better in the last 3 or 4 weeks, and that's coinciding, by the way, with new COVID cases falling. And so with that, we do see a rebound in June GDP, which made up half of the shortfall of March and April. So we really are coming back here. I'll say this, I think there's enormous opportunity in cyclicals here, and dare I say financials, because we do think with the Fed's action that we're going to hear about in part tomorrow will create a steepening of the yield curve, and with that, financials should move higher. There are enormous opportunities here in sectors that have simply not moved. You don't have to go to the epicenter stocks. You can still go to cyclicals in the industrial area to still get some good value here.
I wonder if we can tie this all together and say, if we hear from Fed Chair Powell, Rich, tomorrow morning that they're not going to raise rates for 5 years or whatever timeline they pick, but for a really long time. We've already seen retail investors piling into this market and crazy action in a lot of this, individual stocks. What do you think happens from here? I mean, do you look at a Salesforce up 26%, Netflix up 12% today for kind of no reason, Facebook up 6%, I mean, Shopify, BigCommerce, you name it. Do you look at this and start to think this could all get a little detached? I mean, I'm not talking bubble. We're not talking about that yet, but that it just starts to become a little less encouraging.
Well, Kelly, I think you actually could use the word bubble. I'm not sure we're there quite yet, but if the Fed is promising basically unlimited liquidity for whatever future time period you want to talk about, whether it's a year, 2 years, 5 years, anything like that, the question that everybody has to ask is, will that liquidity make it into the real economy? I would argue the transmission mechanism from monetary policy to the real economy has broken down. It's been breaking down through time. This is nothing new, because we've seen a series of bubbles, but now it's broken down. And you can see that in many different ways. Alicia mentioned the financials before. Right now, the stocks of the exchanges themselves are dramatically outperforming the stocks of commercial banks. It seems to me that if monetary policy were working well and working its way into the real economy as opposed to just bubbles, then we'd see the commercial bank stocks doing very well. That's not what's happening. So I think your question is a very important one, Kelly, about how are we going to distort the economy if the Fed is promising to give that much liquidity for so long, especially with what's going on already.
Interesting. I know. I figured, Rich, given how long we've kind of debated these issues and stuff, that I was just very curious, kind of how you come down on that. So we'll see in the morning. We'll see in the weeks ahead. But for now, thank you both, Richard Bernstein, Alicia Levine,